It was less than 5% that actually went bad. Wait, what? Like, it felt like the whole country was defaulting. But it wasn't. It was just a small piece of a niche corner of the housing market, mostly subprime loans, which were themselves only about 13% of all mortgages, of which only about 25% went bad. So in total, just 4.5% triggered the collapse. That was enough to collapse the whole global financial system. That's the domino effect. Now, I'm not comparing today to 2008 subprime loans. I'm just giving you an example of how little it takes to deleverage an economy that is so connected and so leveraged. The worry right now is not subprime loans. The worry right now is what oil prices might do to markets and what AI and technology might do to jobs. Now, I want to be clear, we're not at the point where robots are about to take everybody's jobs just yet. But what most people don't understand is that it doesn't have to be everybody's jobs. It just has to be enough jobs, which according to Luke Gromen is an unemployment rate of between 6 to 8%. Now, we're not there yet, but if that happens and enough jobs are displaced, that could start that chain reaction of deleveraging. And here's an example. Let's say you bought a house for $500,000 and you put $50,000 down. You borrowed the other $450,000, which means you are leveraged 10 to 1. But if your house drops in value by just 10%, that wipes out 100% of your equity. That's what leverage does. It amplifies when it's working, but it also does the same in reverse. Now zoom out and apply all of that to the whole economy, and here's what it looks like. The homeowner is leveraged, right? They have mortgages. Most people in America do. But it's not just homeowners. It's also the banks that gave you the mortgage that is leveraged, because even the banks borrow money to lend it to us. The private credit fund that's holding the packages of those loans is also leveraged. The insurance company that invested in that private credit fund is leveraged. And the government that's sitting above all of this is the most leveraged one of all, to $38 trillion. So every layer of the US debt-based system is borrowed against the layer below it, kind of like a tower of playing cards.